All right, hello everyone, and welcome to this live intraday strategy session on SB Trade Desk. Michael Boutros here with you guys. Good morning to everyone in the room. Emil, Jay, Premendra, always great to see you. We will definitely take a look at Sterling Key. Remind me if I don't remember to do that, Premendra. We'll definitely take a look at that. I was messing around with it last night. It looks kind of interesting. We came off of median line parallel earlier today, but we'll definitely take a look. Chris Baxter, great to see you in the room, man. Tom, Willie, Terrence, always a pleasure. So let's jump right in. We are in the 5th consecutive day of dollar declines. Looking at the dollar index here and the performance gauge for the greenback, weaker against all its major counterparts, save the Swissy with a slight decline there of 0.18%. Aussie rocketing to the upside with a 1.2%. That's our featured scalp. We went right through the invalidation level. We'll go over that setup in a moment. But I just want to bring your attention to the dollar index. You know, the major support barrier we've been talking about for a few months now has been this 11,855, 11,880 level, which is comprised basically by the swing highs that you made for the opening range of the year. Here's the January open, January highs, February highs, March break, as well as the 2009 high, which is actually the 11,855 target we're testing now. Note that a median line off the highs from March also comes in this region. Jamie posted a chart of this last night, or I think yesterday during the day. Excuse me, and this is the fallout zone, guys. Today's close is going to be critical. If we do close below 8,1155, or excuse me, 11,855, a little dyslexic here this morning, you're looking at targets. Initially, just a soft target would be that 100-day moving average at 815, but essentially, you're looking at the February lows, which is basically a 236, a basic 236 off the highs, and that takes you as deep as 11,737. So certainly a big day here for the dollar. Again, this is the 5th consecutive day of declines. You do have some room and momentum before you hit that 40 region, but today's close will be paramount. If we do close above this, remember tomorrow has a major event risk on tap. You got the U.S. GDP tomorrow morning for the first quarter, the advanced print. We're expecting a slowdown, a marked slowdown from the fourth quarter. And then we're heading right into the FOMC at 2 o'clock. And obviously, it's not going to be the presser with Janet Yellen or anything like that. It's just going to be the simple release of the policy statement. But there's going to be a lot of examining of that policy statement to see if there's any shift. Remember, as it stands right now, we've gotten a little bit of a weaker batch of data from the United States. It's been kind of mixed. And the expectations for interest rates are starting to get pushed back out again, which is why we're seeing the dollar start to come under some pressure. So if there's a little bit more of a cautious stance, if there's a little bit more of a willingness among the committee to kind of hold that wait-and-see approach, you might see the dollar give back some. On the other side of things, on the other flip of the coin, typically FOMC policy decisions, especially at least on the pressers, not necessarily this one, is good for the dollar. So you could see the dollar finding some near-term lows, we noted in the report on Sunday, on the FOMC. So it's going to be an interesting play. I've been very light on the feet here as we close out the month. Remember, this is going to be right at the end month close here, so you're going to get those flows starting to push things back and forth. But keep in mind that, again, you know, the opening range did break, so we're looking lower broadly to see if we can find some sort of near-term low here in the dollar heading into FOMC. Again, the performance for the dollar so far on the day. I do want to bring your attention real quick to what equity markets are doing. Here's what the equity board looks like so far heading into the U.S. Nikkei had a mixed session here. Aussie markets were down 0.57% as we saw the Aussie push higher there. European equities today trading heavier across the board. Okay, and if we look at equity futures in the United States, those are also trading to the downside. So the Dow Jones down 63 points, S&P down about 6 handles so far. So risk is on the defensive, and the dollar is coming off at the same time, heading into the open of U.S. trade. As far as the economic docket is concerned, I do just want to go over real quick. I guess we'll go over it when we go over the pound, but you got a really weak print on UK GDP. We were looking for a print of 0.5%. That's already off from a 0.6 previously. Came in at 0.3 quarter on quarter, year on year, even worse, from 3% down to 2.4. Now, you saw the pound actually still hold its low. We made a higher low rather, and rebound. We'll go over that trade in a moment, but a very interesting development there in overnight. As far as the docket for today, again, there's not really much on tap until you head to 10 o'clock. You get the Richmond Fed Manufacturing Index for April. Sterling dollar fade potential with week's GDP, says JD. JD, I'm not going to lie to you. I actually got stopped out of a couple of sterling scalps yesterday. I will go over that trade for sure. I'm on the same mind path as you. I do think you start to fade this soon, but on the back of the dollar weakness that you're seeing, this is the concern. Remember, this is the fallout zone, guys. If we do close below this, this thing could accelerate pretty quick. One thing I do like to look at is the consecutive bars indicator. This is another add-on indicator that you can get for Trading Station. And it basically tells you when's the last time we saw this many down days or this many up days consecutive. And if we scroll back in the dollar index, the last time we saw 4 consecutive down days, which is what we have now, today will be the 5th, was back here. And this was back in July of 2014. That's kind of where we bottomed. Now, I'm not necessarily saying that this is a bottom here, but the trade is at support. So you can envision a scenario where you stretch into that 4th consecutive day or 5th consecutive day on the lows, then you find some sort of near-term recovery on Fed. Either way you look at it, it's kind of getting into extremes here. We haven't really had too many extended 4-day closes to the downside over the last couple of years. If we look back, I don't know when's the last time we saw more than that. It was back here, and that was a low as well. So there's a lot of indications to have me sort of still looking for that fade potential, JD, 100%. And as it stands right now, just looking at the consecutive bars, obviously today's session is still, we're just opening it up. This could easily be an up candle today. Just take note of that major key support as we head into the U.S. trade session. Questions on the dollar index before we move on? Watch this region here into 11,850. All right, let's jump into the scalps. Aussie dollars first on tap. So here's what the daily looked like yesterday. The major level that we were looking at, 78.84 to 78.74. Big region of resistance, okay? You had a 1618 extension off the low. You had the high day close for March, the pivot low here on a close basis that you made in February. Really nice region. The median line off the low. And we were looking for a possible turnaround there. So we were looking for short scalps, for short triggers as we headed into the resistance region. I want to take Raj's question here real quick. He says, Mike, if the dollar is declining, why would you look for shorts in dollar pound and Kiwi dollar? So it would be sterling dollar, right, not dollar pound, and that would be a long position. So based on what we just said, the dollar is at support, sterling is at approaching resistance. We haven't taken any. Yesterday's short scalp, I'll go over with you, Raj, in a moment, was just based on the level we were already at resistance. We breached that. So we haven't taken any short scalps since yesterday. But now on the back of the weaker data, on the fact that we've extended higher, on the fact that the dollar is coming into some support, it might be worth it. We'll have to see what the triggers give. So guys, the concepts we talk about of where the markets might find a high, it's never advisable for us to try to call a high or a low. But if the trade is at resistance and you're getting a short trigger at the high, that's the best place to try to scalp the downside, Raj. So we're not necessarily calling the turnaround. I don't want to digress. I'll go right into that, Raj, in a moment. Stick with me, okay? So as far as the Aussie dollar, the resistance region was right here. This is what the scalp looked like on the intraday. There was 78.72, 78.84. Again, we breached right through this. The top side objectives, if we broke, a breach of 78.84 keeps the long bias targeting the ML, backed by 79.37 and the upper ML. So here's the ML. We went right through that, and 79.37. Here's what the scalp looks like right now. Okay, and we went for basically for a perfect tag of the upper median line parallel. You can't see it here in this picture, but you can see it on the scale charts. Okay, right over here. So those targets are taken out. Now Aussie's at resistance, Raj, right? So I don't necessarily want to continue to play the long side from here. Even on the daily chart, 79.38 was that 618. There's the upper median line parallel. It's hard to justify taking fresh long scalps from here. Okay, momentum is at 60. Today's close will be paramount. We haven't gotten a real 60 break in momentum of magnitude since back here. And that took us right into the highs. Okay? on a break of the March opening range last year. So could be a major breakout if today's close confirms that. That being said, I can't really validate the long side of the scalp here, so we'll be looking, if we come back into this range, into the U.S. Open, for possible short triggers. Momentum is an overbought condition here. It can stay here all day, so we'll need a pretty compelling trigger to break to the downside, but no plays just yet for the Aussie dollar. Again, remember, things are likely to get kind of choppy and quiet as we head into tomorrow. It's typically the play that you get right ahead of the FOMC, and specifically with GDP on the same day. You're going to see the dollar start to quiet down as we head into tomorrow's trade session. Mark says, I can no longer get behind that dollar-yen short either. You're talking about the swing trade. We'll take a look at it. It just missed that downside target, right, Mark, on the last stretch there. Yeah, I'm not a fan, really, of the yen crosses. The only yen cross I've been trading is the sterling yen. I'll go over that with you in a moment. But is there any questions on the Aussie? I want to make sure we're all on the same page here. Look, we were looking for the turnaround, sub 78.72. That broke. And the whole point of the invalidation levels is for us to know at what level do we want to stop looking for those types of triggers. So I'm looking for short triggers below this. It broke. I'm no longer looking for short triggers on the stretch here, right? So we want to make sure that we keep that in mind as far as the scalps are concerned. At this point, the bearish or the bullish invalidation level gets raised right back into this zone right here. So the same exact region, 78.72, which was our bearish invalidation, is now the bullish invalidation. A break below this, you probably risk a drop right into 77.60. The bearish invalidation level now moves up to here. Okay, so you could get another stretch into the 80 handle, no problem. In fact, that's a major key 618 retracement. And a break above that, you can't look lower. Again, we shift our focus higher. So we want to make sure that we're keeping these key levels in view. We'll see how the U.S. opening range looks. You actually have been getting decent opening range breaks, guys, for the U.S. session. In fact, yesterday's breakout was a break of the U.S. opening range session. Here's what the 5-minute looks like, by the way. Guys, just get a quick picture. The Asia pack opening range yesterday was super tight. Here's the Sydney Open, Tokyo. Okay, had a very nice range for the first 3 hours of trade, 4 hours of trade, even into the European opening range. And that's what actually broke at 4:30. That was a very, very nice signal right there. A break to the upside. You had a near-term trigger in momentum. This is a 5-minute chart, by the way. Break in momentum. Break of the Tokyo opening range high, 78.92. Stop against 78.64. Looking for about 26 pips per scalp. So that would have been a beautiful trade for you guys trading in Europe. Very, very nice open. Okay, so here's the New York opening range setting up just below resistance. Stefan, good question. It's still unclear on which fibs are critical. Looks at yearly and weekly retracements, then see what has been reacting to these levels. Is that right? Is overnight fib important at all? Stefan, it depends what you're doing, my man. It depends what we're doing. I don't want to put added emphasis on one fib or the other. It's not the way it works, right? It depends what you're trying to do. So let me say this. If, for example, let's say we get a short trigger in New York, okay? Let's say the New York opening range is setting up, and we stretch into 78.75 again, it fails, and then we break below the lows, right? Let's say we take a short. Where's your targets to the downside? Well, on a play like that, in near-term price action, just going to take a quick retracement, right? This is a retracement off the lows that you made on the 23rd, right, last week. Very near-term retracement. So as you head into 79.10, we'll be looking to see if we can find some support. I'll be looking to see some reaction. If it holds, you look, this whole retracement goes out the window, and you continue to find the top side targets again, maybe tack on extension. If it breaks, your next target down is 78.70. Once we get out of this range, this is done. Don't be afraid to redraw fibs. Take new price action into account. adjust them. If a new high is made, you got to retrace that fib. You got to take it to the new high now. So Stefan, be dynamic. As soon as we clear that range, that fib is done, right? Doesn't mean that the broader fibs that you're looking at on the setup here mean anything. Get negated, rather. So it depends what you're trying to do. If you're looking at near-term price action, it matters in the near term. If you're scalping. If I have a swing trade position, or I'm in a position for a couple of days or a couple of weeks, and I'm not using fibs on a 5-minute chart as targets. Stefan, does that make sense? I want to make sure we're on the same page here. There's a lot of questions on fib. He says, okay, so you're being dynamic. I thought it was more static. I have to learn how to do that. Yeah, Stefan, everything in trading is dynamic. Guys, if you get static in trading, it's probably the worst thing you could have said, Stefan. Not to pick on you, my man. But no. We always have to be dynamic to what price action is doing, right? As price is developing, so is our analysis. If you find that you're putting your charts together and then you're sitting there for the next 2 weeks working off those levels, you're probably working off of really stale levels. And that's exactly what it is. It becomes stale. It's like a fruit, right? So I hope that adds some clarity. Yeah, the fibs, longer-term fibs on the daily charts, you're probably not going to have to adjust those. I mean, these fibs have been in play for a couple of weeks since the low here. We haven't had to do anything. Maybe this new extension. But I hope that adds some clarity. The lower time frame, the more often you have to reevaluate your fibs. Mark, 100%. Thanks for that. He's 100% right. The tighter the time frame, the more analysis, the more you have to reevaluate your fibs. 100%. I agree with that. Which is why the intraday charts, guys, is so much work, but it's great because it gives you a very clear picture of what the near-term price action is doing, right? So here, for example, this is a perfect example. I haven't adjusted the fib yet. Here's the fib that we were working with to start off the week with that high that we made yesterday. It's highlighting levels way down here, so it doesn't matter to me right now. But there's a new high in play. I don't have any conviction that this is a new high yet, right? But at the end of the day, I'm not working off these fib levels yet. The first level that I'm going to really pay attention to is 77.60, way down here. So by the time that turns over, I'll have more validation that this is a real fib, and we'll go ahead and darken it. That's why you'll see my fibs in gray, because there's no validation that that high is anything significant yet. And once we do get a signal, a short trigger, an opening range break to the downside, something, now I validate that high, we'll turn this green like the other fibs, and it'll be something that will be a little bit more as a hardcore target. But a little quick crash course there on Fibonacci. He says, pick on me. I'm learning. No worries. I love the attitude, Stefan. Cheers, mate. All right, so Aussie Dollar. I want to move on to the next one, which was Kiwi Dollar. Another one which, again, isn't ready for the turnaround. 76.33 to 43. Major resistance on this one. We came right into it yesterday. We noted in the report that, the momentum looked still pretty good. And we had to be on the lookout for short triggers below that near-term resistance, just like the Aussie. It was the same exact setup. And just like the Aussie, she needed one more high to make. And again, just want to show you a couple of different things on this real quick. So here's Kiwi Dollar on the scalp. And here's what we were looking at yesterday. This was the resistance that we came into, a nice confluence region there. You had a basic 236, 618 overlap. It caught the highs in the New York stretch before coming right back below. And we said last night, this is going to be the near-term bearish invalidation. Okay, we're looking for short triggers while within this thing. Once it broke, you're looking higher. Initial target 76.64, 76.60, excuse me, and then 76.93, which was a basic 786, and near-term trendline resistance or channel resistance, whatever you want to call it. I also just want to bring your attention to this slope, guys. And if you're wondering what that line is, that's actually the same slope that we've been working off of for almost a few months now. Let me show you real quick. So here's that crazy structured decline that we traded in the Kiwi Dollar off the December highs. Really, really clean on the median lines. If you take some parallels off that slope to every high, you've seen some really, really nice price action. Okay. And then again, copy that same slope to the fresh high, and here we are again. So It happened to coincide with a 786 retracement. I always tell you guys, if you're looking at Aussie, Kiwi, CAD, the commodity pairs tend to react a little bit cleaner with 786 as opposed to 764, which is simply 1 minus the 236 retracement. So a little tidbit there that oftentimes can come in the clutch. But long story short, resistance at 77 essentially for Kiwi now. Same setup as the Aussie. And with the dollar index doing what it's doing, if it holds support, you're basically looking on a break back below 76.60 to put the shorts back in play. If the dollar completely breaks down and we clear that 8,050 level in the index, a topside breach, you're looking for 77.25, 77.30 once again. That's the opening range high for last week. He says, oh, can you show us how to copy slopes? Yeah, Mark, all you got to do is put your cursor on the trend line, hit Control, and click on it. It'll make a copy. Make as many copies as you want. It doesn't work as of yet on pitchforks. I've already talked to the IT department as far as the developers for FXCM, and they're actually going to add that at the next update. So there should be an update in June for Trading Station that actually has some really, really cool features. And then you'll be able to copy slopes in the same way as far as the pitchforks. But for regular trend lines, just hover over it, hold down Control, click and drag, and you'll be able to copy that line. Nice little trick there. So where are we on the Kiwi right now, Mike? You told us what happened. What are we looking for moving forward into the U.S. session? Here's what the intraday trade looks like on the 5-minute. Again, yesterday, a beautiful opening range break for Tokyo. We sat there for the entire session. Here's the open of London. Okay, so basically it was the London opening range. I stand corrected, which set up right in the Tokyo opening range. Same lows, similar highs. We broke about 2.5 hours into London trade, looking for about 25 pips on the upscale here. Okay, and here's resistance. So we'll see how the U.S. opening range looks. Again, I'm personally looking vulnerable below 7,700 on this. That's my bearish invalidation level. If that does break, depending on whether you get a decent entry on it or not, guys, you're looking for the stretch back into 77.25, 77.30. But for me personally, you know, I'll be looking to see if momentum starts to turn over here just below that resistance target. You already got sort of a, let me just show you a couple of different triggers we could be watching here. Wouldn't necessarily stress that one. It would be more like this. Looks like that could have been a trigger. Yeah, but it's too late in the session. And again, you're just opening New York, so I wouldn't have taken that either. Doesn't look too appealing on this one. The Aussie dollar is the one I was looking at earlier today. It's not on this. This. Looks like that's testing, or will be testing soon. If that breaks to the downside and you see an opening range break sub 79.43, it might be a decent play. But in general, you know, I'd like an entry much, much closer to 79, 75, or that median line parallel if possible. And again, we're never going to really try to short a scalp, guys, or take a short on this pair based if momentum is at this level. Okay, this is when the market has the most push. So this is where you want to be cautious, not really, you know, fight the trade. It's the break below 70 that's going to be your trigger. So some prudence is needed on Aussie dollar still, as I said earlier. All right. Josh says Jamie is short on this pair from the swing side of things. Yes, so the swing side of things, Raj, we're always on the same page, me and Jamie. We are always in collaboration. I'm aware of his biases and trades. He's aware of mine. And thanks for the update, though. But in any event, so the entry on the swing trade of things, not to speak on his behalf, guys, but 76.90. So that's right around where we are right now. His stop's at 77.45, which makes perfect sense to me. That's the level we just talked about. The difference between them, guys, is, again, think about what we're trying to do, right? They're two separate strategies. So they're all in tandem. We're looking at the same thing. Jamie's looking for a resistance hold here to bring this thing back down, a stop against here. for our purposes, since we're so short term, if this breaks, I got no problem playing a long into that and then turning around up here and taking a short. So it's a different mentality, guys. You just got to make sure that we're keeping that in mind. You don't want to take an entry based on a scalp, turn it into a swing, and vice versa. You don't want to take an entry on a swing and try to fade out of that as a scalp, guys. So make sure if you're trading, both of our setups, that you're keeping that in mind. There's no problem trading both of them. You have tons of opportunities across the board, but you just want to make sure you're keeping those, what we're doing in each strategy very clear in your eyes. Okay, so Raj, I hope that offers some clarity. He says, "Who's the boss? You're we're partners in the gig, man." No, a good friend of mine. We've known each other for years, so our analysis just lines right up. I mean, it's always been that way ever since we started. We look at very similar technical factors. We look at very similar, outlooks as far as how to navigate risk. So you won't really find the analysis at odds. It's just that we're trying to play different parts of that scalp. Okay. Stefan says, anything going on with IDO search? Yeah, guys, that's not anything that's gone by any means. It's still in the works. There's a little bit of a delay in production from their end, Stefan. So we're kind of still waiting on them. But that should be available soon. I know I've been saying that for a while. Our next meeting is actually in 2 weeks, so I'll be able to give you an update at that point. Stefan says, looking forward to it. Yeah, it's great. It's great. We've been using their professional grade services for a while, which has been great. Their institutional side research. So we'll have something for that for you soon. All right, so that is the Kiwi Dollar. Those are the two major highlighted plays I've been focused on the dollar. Again, the scalp page is going to be a little light as we head into tomorrow. Tomorrow is going to be the major event risk. We're going to go into the FOMC very light. I don't expect to have any positions open per se because I do want to see what the volatility is going to do as far as the policy statement. The Kiwi Dollar, which is what we're looking at right now, is going to be a major focus tomorrow because after U.S. GDP, after the Fed interest rate decision, you get the RBNZ a couple hours later. And obviously, we're not expecting any major change from the Kiwi Central Bank, but certainly the major thing that we'll be looking for is Wheeler. I mean, that guy is notorious for jawboning, and we'll see if he's able to impact price action at any point as we head to near-term resistance. Remember, for the Kiwi Dollar, the major play that we've been in for last week, since last week's scalp, or since last week in general, was the reversal off 77. Okay, this was a huge region with the median line, the R1 pivot, the October trend line, the 2013 lows. You had the lows that you made for October, November, January opening range. There was tons there. So we've been playing the downside based on that whiplash and the hold in momentum. This is still the broader invalidation level, and that's why if it breaks, you're likely to see this thing really start to run. A move above, just for reference point, guys, a move above 77.35, 77.40, where Jamie's stop is, those highs, essentially targets 77.91. What's 77.91? Well, that's the 2015 open. Okay, and that would put Kiwi unchanged on the year. So that's the contingency plan. If the invalidation level gives out near term, look for resistance around 77, looking for short triggers below this region. On a break, watch 77.30, 77.25. All right. Okay, so on radar yesterday was dollar CAD and euro dollar yet again. I guess before we do that, let's just take a quick look at gold. What can we say? The critics hated on us, but there was caution warranted, and it's paid off on that decline that we saw back on Friday. Look, I don't want to correlate this to the dollar. Again, I really want to stay away from that kind of mentality because they both moved in tandem on very strong stretches throughout the course of the last couple of months. So it's not necessarily because we're seeing the dollar come into support that this rally will halt. But, we did technically close above the April trend line yesterday with this stretch right here. Again, bring it into a close. Check out the line chart, some clarity. And we also did technically break through this pitchfork, which was holding price action pretty darn nicely until yesterday, right? The lows almost exact hat before this thing whiplashed and broke right through. So I do think you can get a pullback. As I said in the report last night, 1191 is sort of my line in the sand. That's the close that we made back here on the 14th. It's pretty darn close to the lows that you made back in February. And former median line resistance is right there as support. So you might still get a pullback, but that's the new bearish or bullish, invalidation level. So even if we were to get that pullback, guys, I do think this thing remains constructive. Remember, we were watching this trigger for a couple of weeks. It broke to the downside. We came back to test it as resistance, and we're pushing through now, right? So that kind of invalidates the trigger that we got on the downside. Objectively, we came into the monthly open, okay, and it held as support. So there's no reason for us to sit here and continue to press the short or continue to say that this isn't a broader bearish trend. I don't think that's the case right now. 1191 is my line in the sand. That would put me back on the bearish side. That being said, you're looking for a topside breach above 1209 to possibly get that rally back up into 1223. Again, gold is not something I scalp on a daily basis, guys, but it's, it's paramount, and sometimes it can be a very nice tell into what's broader happening in the broader risk market, as well as, what's happening in the dollar. So that's gold. Raj says, can you please take a look at dollar yen? It just missed target set for taking profits. Yeah, let's take a look at dollar yen. Again, guys, I don't want to address necessarily the swing trade of things. Jamie will be on tomorrow for his midweek strategy webinar, so I'm going to let him go through those setups in greater detail. But, I haven't really been attracted to the dollar yen for a couple of weeks. If you guys remember, 2.5 weeks ago, we were all over the dollar yen. We were playing the upswing here, and then we turned and played the downswing here. Last week was sort of real tough to play. This week, with all the event risk on tap, you got the BOJ. I'm not really a fan of it, but this is my take on things, Raj. I really wouldn't get worried on the long side even until, I guess, below this region is what I want to say. You have the 100-day moving average at 119.24. Today you have the upper median line parallel just above that. You could see a little bit of a swing if the dollar relief holds, even on a topside break. I mean, maybe 120.15. It's such a range trade, guys, that there's some contraction. I do like the broader trade lower, and I want to see that 118.15 level give out. But until it does, I'm hard pressed. Even on a scalp basis, here's what the scalp chart looks like. It's pretty naked, but hasn't really been something I'm focused on. So I have two pitchforks in view. I've kind of been watching this for the last couple of days. First of all, 120.75, which is where we maxed out a couple of weeks ago. Remember, this is the last time we played dollar yen, was an exact 100 off the low. So if that, in Elliott wave theory, is the play, okay, correction means the broader trend remains weighted to the downside. So on that account, we should still be looking to sell rallies while within this formation here, right? Now, it just so happens that the low that we just caught could be this median line in play. Don't have too much conviction on it. Again, it's been kind of messy on the pivots, but nonetheless, it has caught a third dip here in price. So irrespective of that, guys, a study of this, looking at it for the weekly opening range, and basically you have a basic opening range play. And these are how I like to treat these trades, where it's kind of stuck, whoops, and you don't have a clear-cut directional bias. Here's the opening range high for the week. We'll put that in green, thicken it up a little bit. Okay, and here's your opening range low. I mean, until that range breaks, guys, I don't have a play. You can play within this range, but 20 pips on a quarterly ATR, man, I got pairs that got me, 30. You're looking at sterling yen to like 35. There are pairs that give me such better ranges. I'm not sure why I would, try to scalp this per se. The swing trade of things, again, it's a completely different ballgame, and that's still in play, no change. But as it stands right now, it's just not my cup of tea. Exactly, GS. Thank you. Says dollar yen yawn 20 pip 8 quarterly ATR. Exactly. So we also want to know, guys, when we're trying to scalp, we want to know where to look. And one of the first things I'll do is just thumb through the charts, take a look at the ATRs. 25 pips, I'd look at that if it was interesting formation. 36 pips, even better. Aussie key, 22 pips, lackluster, but it did make a nice breakout, right? And then we'll start to drill down into the pairs as the formations look more interesting, as you have a little bit more clarity on the structure you're trading within. So hope that offers some clarity on dollar yen Raj. Again, keep it in mind what you're trying to do with the trade. The radar. Just want to go over this real quick. These are trades again that we're sort of on the menu. We might take a stab at a scalp here or there if there is clear-cut triggers, but things that we're looking at. So for the euro dollar on the daily, 108.83, major big level. Okay. Here's what it looks like on the daily. If the close today validates this break, you're basically looking on a stretch into 109.97. For all those people saying, "Oh my God, Greece, it's going to be a disaster. They're going to leave the euro. Let's, look for parity on euro." They're hurting pretty bad on this break here if it holds, guys. I'm not trying to pick on the euro shorts. I'm just picking on, guys who are choosing the headlines over what price action's been saying. Big region. Here's what the scalp looks like. We came right into this yesterday and reversed right off it. 109.24, 78.6 retracement off the highs. Momentum still looks pretty constructive on every rebound here. A little bit of a deeper penetration to 50, but still holding that trend line from last week. That's going to be the operative trigger to turn the momentum signature around. And what can we say, guys? Next topside target is 109.92 on a breach here above 109.50. It's a nice 50-pip stretch. 33 pips, quarter of daily ATR. The region's pretty good. This was the invalidation level for the short side of the trade. We broke above it. We're holding as support. And again, trading, guys, is a series of if-then statements, right? Price action is going to determine what we're doing. If we get, again, a U.S. opening range set up or a break, trigger break to the downside, and this thing moves back below 109.25, at that point, again, readjusting our fibs. This fib is not down till here, so we're not really worried about it, but we want to take the new high into account. You'd be looking for initial targets, again, right back at that 618, 108.84, which is the same level here. Okay? And it also coincides with the 50-day moving average, which is why we were looking at that so sharply. Also, guys, I'm sure you've seen this before. I think I went over this in the webinar on Daily Effects yesterday. That trend line from the June low. 1 tag, 2 tags, 3 tags, break, instant resistance, 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 resistance. If we close above it, it's a simple breakout trade. There's no point in trying to fade it. All this is to say, guys, we need to break back below 108.83 to get this thing back on the short side. Otherwise, you don't want to sit here and get too aggressive on it. That's what I'm thinking, though. I'm thinking that this thing gives us a hold here near term. And we'll be looking, again, as always, at the dollar index for some conviction on that. Mark, what's the wow for? He says, wow, just wow, ... I'm assuming, interesting, that trend line, right? Yeah, it's beautiful. It's beautiful. I mean, these are the kind of setups that you look for to get those conviction breakout trades, conviction invalidation levels. And again, because that trend line coincides on the 618, on the 50-day moving average, right? That's why we have all the conviction on it. The more technical factors that line up, the more significant the breakout resistance support line becomes. Raj says, interesting comment. He says, it has been hard to enter long. It has been hard to enter long on both Eurodollar and Sterling Dollar, as there has been no pullback at all. How would you play this? if the signal's not there or you don't get the pullback, you can't play it, Raj, and that's okay, my man, right? Listen, guys, when we're trading such near term, we can't stress every move in markets. If we miss a move, we can't chase. And it sounds to me, Raj, like you're trying to chase this. If you don't get the initial trigger or you don't get the long entry on the pullback or at least on a breakout of the opening range that allows you to keep your risk-to-reward ratio at least 1-to-1, then you simply can't take the trade. It has been tough. I'm with you 100%. And that's fine. Let's go over some of the trades, or let's go over the trade that I got stopped out in yesterday. We'll talk about that real quick. Obviously, the arrows reset, guys, after 5 o'clock, so I can't show you the actual entries, but I know exactly what I did, and I know why I did it. And, you know, sometimes the triggers will pan out, and sometimes they won't. Taking a look at sterling yen, you know, I thought this was going to be a better play to the downside than sterling dollar, and that was based on the major resistance we were heading into yesterday at 181, 181.05. It was a big level. You have a 618 retracement confluence with the 100% extension, my favorite overlaps, and typically the strongest breakouts, okay, and the strongest resistance and support holds. So when we have these technical factors lining up, you get a little bit more conviction on the level. For me, maybe it's a little bit more of a gutsy play. I should have kind of tamed my expectations, but heading into New York session, you know, we saw this thing come right back up into this region. And as we came up, stop against the highs at 181.12 looked like a nice hold as momentum was coming into this resistance, and I thought I was trying to get cute with it, try to play the downside. Well, we blasted right through. We didn't take a full 36 pip stop. It was 17 pips, if I'm not mistaken, because we got that spike into the high and then it blasted through, but it's a good thing. And again, I'll take a stop like that all day long, guys. No problem. No problem. 17 pips, 18 pips, and I'm looking for 35. No problem. Because I know I'm going against the invalidation level. So if that breaks, it's a good thing I got out. When this breaks, guys, and you're scalping, you shouldn't be thinking to yourself, oh, damn, I took a loss. You should be thinking, that was close. Good thing I got out of that one. Right? That's our mentality. So the breakout here hasn't had me doing anything in sterling yen. But that was one scalp that we took yesterday that kind of went against us as we broke that barrier. So looking higher still, next topside objective, if we clear 82, 82.60, 764 retracement. Okay, and that's off the highs that you made back in March. Let me just clean this up so you can see where these scalps are, where these extensions are. All right. It's ridiculously clean as far as the pitchfork. I don't know if you guys think I showed you this yesterday. But you can see this is the third consecutive week that we're holding this pitchfork. The median line hasn't been so clear. Obviously, the basic trendline resistance and support channel has been clear, but that's just further cast a shadow right up here, you know, into 82.60 on a breakout type of play for sterling yen. That being said, near term, what's the bullish invalidation? It's the same level that was the bearish invalidation. That's going to be the 81 handle into 81.12. So that's sterling yen. Could stretch into a new high. I would be looking for short exposure up here. As it stands right now, you're getting divergence in momentum. So price action has made a new high. Remember, we're only looking at the lines, line chart, you know, the close for every candle. Higher high, the oscillator, lower high. And again, when the reference points are below 70, closer to 50, even stronger than anything that you would get in the overbought or oversold condition. So could be ready for a little bit of a turnover if this thing doesn't hold. 82 is a soft target, noted on yesterday's scalp report on Daily FX. You know, that being said, I'll need a little bit more conviction before trying to play the short here again after yesterday. So we have a clear picture of what's going on in sterling yen. And again, the variable here is the yen strength. I would love to see some dollar-yen strength start to, or some yen strength, excuse me, start to materialize to press the dollar-yen lower. That would obviously help our sterling yen. Remember, the data was not all that good. And this is another reason, guys, that we don't want to stress the data print. We want to stress the data reaction. Here's what the British pound looks like on the back of that quote-unquote weaker than expected GDP. Higher on the day. Higher on the day. Just like euro dollar, maybe not quite as significant a resistance, 51.74 into 51.85, a nice major resistance target. What's there? What's not there, I guess is the question. 618 retracement of the 2015 range. Essentially, we opened just a tad higher, but from the decline off February. 100-day moving average there in blue. You know me, I'm not big on moving averages, but it's there. Something to take note of. Basic 236 retracement off that high into the lows is your first fib level. Trendline resistance off the highs from July, all congregated right here. We closed Friday right there. Yesterday it was support. Near-term resistance 53.20, 53.40. Again, a trade where you have an extended play to the upside. So let's bring up the consecutive bars indicator and just see when the last time we saw an advance of this magnitude where we've cleared 5 days of consecutive rallies. Well, the last time we saw that was way back here, back in March of last year, and that one saw a quick 3-day pullback before we continued higher. So again, even if we were to play the shorts, it's not to say that the whole trade is reversing. It's not to say that we're looking for a move back into 48.12. On the contrary, you're looking to let this thing reset, give it a reprieve to get a better entry on the long side. From the scalp side of things, that's opportunity. Okay? Now again, I wouldn't even try to press the shorts until we come into a little bit more of a significant resistance region here on the daily. Remember, momentum is trying to top 60. That would be the first 60 break again since that June move. That 60 break in momentum was accompanied with a break above the June opening range. So for the first 11 days of the month, we set that range just above support. That broke to the upside, gave us an upside bias. So that was the 60 break, and here we are again. So, be cautious here. We want to see what the close looks like. Remember, the oscillator on the daily doesn't mean anything until the day closes. So that's something I'll be looking at for the sterling dollar. Here's what the pound looks like on the intraday. Okay? Not really the most convinced with this technical formation again, but it's been giving us some good guidance so far, so we'll keep it in view. Again, near-term resistance 53.20 is a soft target. It's basically a pretty strong pivot in price there. And more importantly, 53.40. That's an overlap of the 786 retracement from the decline. By the way, if you make this a 764, it brings it right down here to 53.20. So irrespective, we're watching both. But more importantly, that 100% extension right off the low comes in right there as well, 53.40. So we'll see if that extends into that region. It'll be a much more comfortable region of which you possibly start to look lower. That being said, again, I haven't put the pound on the radar even right now. I kind of tweeted this chart out last night ahead of GDP, so you guys have the levels. And in fact, the GDP spike low came right into that 618 at 51.74, literally almost to the pip, guys. The low is 51.73, and then rebounded right through. So remember, the data doesn't really support the move. This is kind of more reactionary. You could still get a stretch into the highs, but just like the other trade that we were looking at in the euro, you are getting some divergence here. So one thing I do want to say, guys, is don't be surprised if you do get a couple of short triggers on the other side of the trade, and then the trade just fizzles out. So this is where I don't like to really trade into the data. You could get a rally here. Let's say the opening range breaks to the downside. There is a trigger, but then throughout the U.S. session, it kind of just decays and flattens out. Happens a lot right ahead of major event risk. So just keep that in mind. Jay Jackson says, I love it when you speak to the psychology or mental thoughts relating to stop outs. The stop out is an invalidation that leads to a new opportunity. Jay, that's exactly how we see it. It's exactly how we see it, especially on the near term, man. Especially on the near term. You can't get bent out of shape if you're taking a stop, especially if it breaks an invalidation level, because that's just exactly what you said. It validated a new opportunity. Now, guys, I'm not going to be an advocate of, oh, I got stop loss, let me just switch the trade and go long. I was short. That's the wrong way to trade. And if you're doing that, please, send me an email or something. Let me see if I can help you. But when it comes into an invalidation level, and that's the whole thing with having conviction behind your analysis, guys. If you don't really have conviction behind the levels that you're mapping out, we're just throwing darts. So I'm with you 100%, Jay. I like that comment. Mark says, if we have time, can you take a quick look at Euro Aus, third time testing 37.10 area? Sure can. Here's what Euro Aus looks like on the daily. Oh, man, you're absolutely right. Thanks for bringing this to my attention. I can't believe I didn't check this out this morning. We're right back at that key support. In fact, Mark, 37.89 was pretty big for me. Yikes. You got a support trigger. Oh, you're testing 40 right now in momentum. But the support trigger looks like it's given out. It's a 3-point support trigger. And you're basically testing the lows right here. Yeah, this is pretty huge, man. Let's see what the intraday chart looks like. Bear with me, guys. I just want to see what some of these, the slope of some of these triggers. Give me 1 second. Yeah, this is pretty big. So here's what I'd be looking at. Let me zoom this out real quick so you guys can see kind of a better idea of what the broader setup looks like. Okay, so now that you have sort of a kind of a picture of where we are, right, in the broader scheme of things, it looks like obviously this would have been a constitution of the break of the weekly opening range. You tested this low yesterday in U.S. trade. You tested this low again in Asia. It was the Asia opening range break, and the move below 38.20, essentially what we talked about yesterday in the webinar. I'm not sure if it was yesterday. It might have been last week. Opened up basically 137.80, which is, again, the lows that we made for last week, and this region here. This is the support I'd be watching near term. Obviously, 137.04 is the low from last 2 weeks ago, right? So that's all that is. It's not a fib level by any chance. It's 416 low. But it also coincides with that slope line off the highs. Just want to see if this bears anything here. This could be a play here as well. Similar slope. Oh, wow. Okay. Line's almost perfectly. So it's very similar to the slopes we've been following here. We could just put that there and put this up. Yeah, I don't know if there's a play here per se, Mark. I don't necessarily have a play for you, man. If we get a mean resistance trigger in Euro, or I guess on this one you'd want some Aussie weakness, and Aussie turns over, you might actually find a nice rally back into 37.80 to play. That being said, you're in oversold condition. If this thing gives out the bottom side, 136.30, I think is a decent target. On the intraday, I don't even have anything until 135.35. We'd really need to rework these levels in that type of scenario, but you're absolutely right. Major key support here. It's kind of too stretched to get involved, in my opinion. There's nowhere to put your stop. And again, Jay, to going along with kind of thinking along the stops, it's the most important thing, guys. It's the most important thing. You could be right 90% of the time on the directional bias, but if you are horrible at risk management, or if you're not managing your risk, it doesn't matter. You'll eat a stop after stop after stop after stop on a strategy like this. All right, so make sure we're being prudent on that. I really couldn't put my stop anywhere here until 37.90 is where the stop would need to be, just above this region. And I can't, I'm not about to take a 90 pip stop on that. So, big mover. It's one of those prey trades. I agree. Mark, I stopped taking trades like that years ago. I'm a man of faith, but as it pertains to trading, I don't know if the prey trade is a good strategy. Philip says, hey, Mike, sorry I wasn't able to follow the entire webinar. Could you quickly say if there's any point to trying the short dollar CAD scalp? I wouldn't, for me, I wouldn't necessarily be, no, it's on the radar still. If you saw it on the intraday charts, it's on the radar still. Here's what the scalp looks like. We didn't go over this yet, so let me just cover this real quick for you, Philip, now that you're in the room. It's now testing Asia and yesterday's lows. So here's what the radar chart looked like for dollar CAD. We talked about this in the report or in the comments below. 120.95 has been like a magnet, right? That's this level right here. There was actually a very clear short trigger last night after I published this. And it turned out to be this slope here, right? That's what this is. So it was a very clear rally into 50 in momentum, failure, opening range hold for Europe and Asia, and then a break of the opening range low. So this was a clear-cut trigger against the highs, about 25 pips. You're looking for about 30, and you got the 30 pip drop into 50, right? So this actually would have been a really good scalp to the downside. But, you're holding against this slope support. So the daily chart, that wasn't really a conviction close below it. You'll see a lot of people on Twitter, and someone, Jonas, who was a regular here, was tweeting at me saying, hey, I think we made an outside key reversal. That's true. We did. But guys, we want to know when that matters. Okay, when that matters. An outside key reversal like this at the highs, like here, this was an outside key reversal. Made a new fresh 20-day high, took out the previous day's highs, closed well below the previous day. So that's a technically significant outside key reversal. But an outside key reversal at support, at the lows, a lot of times that can be the exhaustion trade. So that could be telling you, hey, this thing's getting tired. That being said, you can't invalidate the short side until we get, a break above some opening range, a reversal opening range break to the upside. Everything's been breaking lower, So if your question to me is there any point in trying to short dollar CAD? For me, I'm just not interested in doing anything here. Remember, tomorrow is the Fed, and you have event risk from the GDP release for the United States. So again, I'd like to play a possible recovery, like I said, in the case where the dollar finds some support. But for me to try to press a short here, remember, dollar index is at a pretty key junction, ahead of key event risk. So that's another reason I left that on the radar and didn't put it on the main page there for the dollar CAD. Does that help, Philip? I wish I had more conviction for you, man, but that's just where I am on the trade. I haven't taken anything here. Adrius wants to look at sterling Kiwi, or did I miss it? Haven't, and we will. Let's do that real quick. We are running short on time, but this will be a last thing we want to look at. Permendra wanted to take a look at this earlier today. So sterling Key, kind of a messy turnaround. The sterling crosses in general, which we focused on so strongly last week, have been, falling out of focus with us. You'll notice that none of them are on the intraday page. Near-term price action has just been dodgy for me, so I haven't really been focused on them per se right now. I just don't like where this thing capped out. If there was a little bit more of a target up there, I would have liked to play the short side. But even on this median line, which caught the lows here, caught the stretch high here last week, kind of dilly-dallying around there now, right? The high wasn't really a retracement. It was just a psychological barrier. In any event, here's what the intraday trade looks like for sterling Key. So the only thing that looks decent is this. To me, yesterday looked like, I was looking at it last night, or earlier this morning rather, it looked like a break of the opening range low for the week, We're testing it as resistance, and it kind of looks like we're just going to hold that. As far as the near-term structure, you know, the downside support, you're looking at like 98. See if there's a 38.2 somewhere close here. Yeah, I don't know if I want to necessarily stress that anymore. Possible structure. Possible. We'll put it in put in a dashed line like that, but either way you look at it, it highlights a move basically into 98 here, as long as you stay below 99.20. If 99.20 gives out, that's the opening range high for Asia. I'm sorry, nope, I'm lying. Yeah, it's basically the U.S. opening range high right now. If we break back above that, you can see a rally back into like 99.60, but this is going to be the near-term bearish invalidation level. The momentum signature does look bearish on this, guys, right? Initially you held 40 here, but 60 failed, then you broke 40. This was actually a beautiful trigger as well, right off the lows. 3-point trigger support, right? Really good risk to reward against the highs there. That would have been a beautiful trigger. Initial targets would have been right here. But, you know, you basically stay bearish below 99, 99.20 here near term. Guys, does that help? Idris and Permendra says thank you. All right, guys, so we're going to wrap things up here. Again, we'll be back on tomorrow, 8:30 Eastern for another hour. Hopefully we'll have some more of these pan out, and tomorrow we'll have a nice setup, guys. We'll look at all the dollar crosses right before we head into the FOMC. It's likely to be dodgy going into the session. It's the end of the month. You're heading into the FOMC. Please just use some caution. Reduce your leverage a little bit. We're still going to watch the Aussie and Kiwi today for a reaction. Watch the dollar index on the close. 11,850 is going to be the big play as far as whether that closes below that or not. Some comments. Thank you, Michael. Adrius, you're more than welcome. Stefan says, I've got to keep learning about RSI. We'll ask more questions. Mark saying, love these webinars. Learning so much. Have a great day. GS, Adrius, thanks to all you guys. Permendra, I will see you tomorrow morning. Best of luck trading. We'll see you then. Cheers.